There's a multi-billion-dollar company shaping your everyday life, and chances are you've never even heard of it. If your dog's been on heartworm pills, your cat's gotten vaccines, or you've eaten meat from farms that protect animals against diseases, chances are this company was quietly behind it. Have you guessed it yet? Today we'll break down how Zoetis built a near monopoly in animal medicine, the risks it faces, and where the growth could go next. But what's shocking is how it makes money, and it's even more profitable than you think. Zoetis is actually the world's biggest animal health company, but it's unknown to most people. The animal health market doesn't get as much political attention as human medicine, but it's just as important. On one side, people treat pets more like family now, so they're willing to pay for premium vaccines, diagnostics, and therapies. On the other side, the world's growing demand for protein means farmers can't risk outbreaks wiping their herds or flocks. Zoetis serves both groups with a wide range of products, medicines, vaccines, diagnostic tools, and even genetic testing. If you're new around here, subscribe and tap the bell so you don't miss out when we post. While you're at it, smash the like button so we know that you're enjoying these videos. What really makes Zoetis interesting is how steady the business is. Unlike Big Pharma, it doesn't face the same patent cliffs, heavy regulation, or generic competition. Pet care brings in recurring, high-margin sales, while livestock products grow along with global food demand. Put together, it gives Zoetis a growth profile that's a lot smoother and more reliable than most human healthcare companies. The company started as part of Pfizer and officially spun off in 2013, carving out a profitable space right between healthcare and agriculture. Zoetis basically has two engines powering the business: pets and farm animals. Both sides bring in a lot of money, but they work a little differently. On the pet side, think dogs, cats, even horses. Zoetis makes about half its revenue. They sell things like flea and tick meds, vaccines, skin treatments, and pain relief. This part of the business is growing fast because people treat pets more like family now. They're willing to spend more for high quality care. The margins here are strong, and the steady need for products like monthly preventatives means predictable, repeat sales. Then there's livestock: cattle, pigs, chickens, sheep, even fish. Zoetis sells vaccines, antibiotics, and generic test kits to help farmers keep herds healthy and productive. This side of the business rises and falls with global meat demand and commodity prices, but because the world keeps needing more food, it's a reliable long-term growth area. Altogether, Zoetis has a huge lineup, more than 300 products, so it's not dependent on one big blockbuster drug. They're also putting money into diagnostics and digital tools, which work hand in hand with their core medicines and create more of a full-service ecosystem for animal care. The strategy works because it balances the steady premium growth of pet care with the massive scale of global food production. Compared to human pharma, Zoetis doesn't face the same heavy regulatory or insurance hurdles, and with such a diverse portfolio, it's well protected if one market slows down. The numbers really show how well its two-market model works. In 2024, the company pulled in about $9.3 billion in revenue, with pets making up just over half and livestock bringing in the rest. Sales have been growing steadily in the mid to high single digits each year thanks to strong demand for skin treatments, parasite control, and vaccines. Profitability is impressive, especially compared to most pharma companies. Gross margins sit around 70% thanks to premium pricing power in pet health, and operating margins stay above 35%. For context, that's far higher than many big drug makers that get weighed down by the R&D costs and pricing pressures. Net income almost reached $2.5 billion in 2024, and the company keeps shareholders happy with growing dividend and steady share buybacks, all while still putting in about 7 to 8% of sales back into R&D. Debt is very manageable even after acquisitions to strengthen its pipeline and global expansion. Zoetis is the clear leader in animal health worldwide, but it's not without competition. Its closest rivals are Elanco, Boehringer Ingelheim, Merck, and Virbac. Each competitor has certain strengths or specialities, but none come close to Zoetis in terms of scale or the range of products it offers. The market itself is pretty attractive. Spending on animal health has actually been growing faster than human healthcare, especially in developed countries where pets are treated like family. And in emerging markets, growing middle classes are driving both more pet ownership and higher demand for meat, which boosts the need for livestock vaccines and treatments. What really sets Zoetis apart is how integrated its offering is. It's not just about selling medicines and vaccines. The company also provides diagnostics, genetic testing, and digital monitoring tools. That creates a much stickier relationship with vets and farmers who increasingly want a bundled solution from a single trusted partner. Geographically, Zoetis gets about half of its sales from the US and the other half from international markets. That mix gives stability of developed economies plus exposure to faster growing emerging ones. And with its massive global sales force and manufacturing network, smaller rivals simply can't match Zoetis' reach. Even with all its strengths, Zoetis isn't risk-free. On the livestock side, the business is tied to the ups and downs of commodity markets. When protein prices drop, farmers usually pull back on spending for animal health. Disease outbreaks can also cut both ways. They can drive a spike in vaccine demand, but smaller herd sizes afterward can mean less ongoing treatment. For companion animals, the main risk is around innovation. Zoetis has done really well with blockbuster dermatology drugs like Apoquel and Cytopoint, but if competitors start launching similar products or generics start eating into exclusivity, growth could slow. The animal health market doesn't face as much generic pressure as human pharma, but it's not completely insulated either. Regulation is generally lighter than in human medicine, but there are still risks. And because Zoetis operates globally, currency swings and geopolitical tensions can also weigh on results. Looking ahead, Zoetis' future really comes down to two big trends: people treating pets more like family and the world's growing appetite for protein. Both are long-term shifts that give the company a solid runway for growth. On the pet side, Zoetis is likely to keep expanding in areas like dermatology, pain management, and diagnostics. Drugs like Apoquel and Cytopoint already prove that pet owners will likely pay up for innovative treatments, and new products in the pipeline could help keep that high-margin engine running strong. Livestock will still be a core part of the business, but it's evolving. With regulators cracking down on antibiotic use, farmers are turning more towards vaccines, diagnostics, and genetic testing, areas where Zoetis is already investing. And in places like Asia and Latin America, rising incomes are driving both more meat consumption and more spending on animal health, which opens the door to huge growth opportunities. The big challenge is keeping up with the pace of innovation while justifying its premium valuation. Competitors are doubling down on pet health, and biotech startups are moving into the space. Zoetis will need to prove it can stay ahead with real breakthroughs, not just small upgrades. At the end of the day, Zoetis is a healthcare giant hiding in plain sight. It's quiet, essential, and deeply woven into everyday life, and it's likely to stay a dominant force in animal health for decades, even if most people never know its name. Thanks for watching this episode of S&P 500 in 500 seconds. Tap like and subscribe now so that you're first in line for our next breakdown on Goldman Sachs. It's dropping soon.